Given the fast-paced nature of modern markets, the flexibility of structured warrants make them a valuable tool in your investment portfolio. Let's look at a few strategies. The first is called cash extraction, and it involves call warrants. With call warrants, you can free up capital while still maintaining exposure to certain assets. For example, let's say an investor holds 1,000 units of stock A, which is currently trading at $10. He needs some cash urgently, but doesn't want to sell his position because he believes stock A will appreciate in the near future. He sees that call warrant A is available at 20 cents each. So he sells his position in stock A at $10 a share, for $10,000 total. He then buys 5,000 units of call warrant A at $1,000, leaving him $9,000 in cash. When the value of stock A rises, the investor benefits from the movement, while still having cash on hand to explore other opportunities. Let's look at a second strategy involving put warrants. Put warrants allow you to hedge your bets and protect the value of your portfolio against a falling market. For example, let's say an investor holds 10,000 units of stock B, which is currently trading at $10. He's worried about an impending market correction, but he's reluctant to sell his shares in case they appreciate. He sees that a put warrant on stock B is available at 20 cents each. So, he holds onto his position in stock B and buys 5,000 units of put warrant B at $1,000. Then, as the price of stock B falls, the value of put warrant B rises, helping the investor offset his losses without spending too much capital. Apart from these two strategies, many traders use warrants for speculative purposes. By adopting a short-term directional view, these traders aim to achieve quick profits. This strategy is appealing because, 1. Warrants are much cheaper than their underlying asset, so it doesn't cost much to gain exposure. And 2. Warrants have unlimited upside potential with a limited downside. Meaning if the market moves against their bet, investors can only lose the total amount they initially paid for the warrant. However, as a speculative trader, you should still follow the basic rules of trading and cut losses quickly if your directional view is proven wrong. You should also consider your own investment goals and risk profile, and make sure that the type of warrant you're buying and the strategy you're employing both match your objectives. In our next video, we'll learn more about how to trade warrants on SGX.